Okay, let's unpack those movements with Fahima Adia from Momentum Investments. Fahima, as always, thank you very much for joining us this evening. Let's start with the overall performance of the JSE. Yesterday was a dismal day on the local bourse. We were following through from what we saw coming through on the global markets around the banks, and so today we ended off flat. What would you say were some of the major contributors to the movements that we saw today?
Evening, Rapia. Thanks for having me. Yes, like you said, the JSE was quite flat today after that big sell-off yesterday across global markets. Saw JSE lose almost 3%. That, of course, being driven by that negative sentiment after the collapse of Silicon Valley Bank. And then we also had those issues with Credit Suisse emerging yesterday, and that just had a contagion effect across global markets. So if we look at the JSE today, there has been weakness in the resource sector, which seems to be driven by concerns about a slowdown in global growth. If you look at precious metals like gold, that's recently been performing well, though, because generally gold is seen as a safe haven, and investors have been turning to that amidst all the volatility over the past few weeks. But if we have a look at some of the other base commodities, so the likes of your copper, aluminium, nickel, as well as crude oil, that's been a bit weaker today. And we believe what's driving that is now investors' concerns about an expected global slowdown, particularly with all these issues emerging in, the US and Europe with the banks.
And we'll get into those bank issues in a moment. Before we do, some local company updates. Exaro releasing an impressive set of results, but it did decide to reduce the dividend. But it also indicated that it still faces issues around export volumes because of Transnet and the logistics issues that persist there. What did you make of the overall Exaro picture that was painted?
Yeah, I agree with you, Rapiwa. So I think that they did report a pretty strong set of results. It was broadly in line with consensus estimates. And it seems that revenue was driven by the higher coal price last year. But like you said, they did flag that the exported volumes were down by about a third due to the issues with Transnet, which is, of course, impacting all mining companies across the country. And the dividend, like you said, was also down by about 30%. We expect they're being conservative with their cash here, because of the headwinds they're facing this year due to the issues with Transnet, load shedding, and then we've also got a weaker coal price, which could impact their profitability this year.
Here's an interesting one for Hima PPC, which has been struggling after this whole DIY phenomenon died down after the peak of the pandemic, actually boosted some of its earnings because of the slowdown in imports, that backlog or the delays at the ports, preventing those cheap imports from coming in and obviously encouraging local sales. What did you make overall of that update?
Yeah, so the market didn't like the update. The share price plunged by about 9%. So I think this was driven by the fact that they said cement sales volume actually fell in Botswana, in South Africa, unfortunately. So those are big markets for them, with about 2/3 of its revenue generated there. And then it also said that consumer spending on building materials is not expected to increase in the short term. And then they also need to hike selling prices between 5 to 7% due to input cost pressures. So it seems that cement demand in South Africa for now is largely dependent on the government's infrastructure spend, which is much needed and has been promised for a long time, but isn't really coming through. So, yeah, I think it's facing quite a few headwinds this year.
Okay, so let's head over to the global markets. Now we start with Credit Suisse with the latest there, that loan announcement boosting the stock of that bank. And it's a very complicated story here because it's always in trouble for some or other thing. And yet here it's getting another loan announcement. Very briefly, Fahima, why is it important that we understand this Credit Suisse story?
Yeah, so I think, Credit Suisse is obviously a very important bank in Switzerland. It's a big bank there. And the Swiss government obviously doesn't want it to trigger, contagion and systemic banking risk if it does, fail, or if it is found to not meet capital and liquidity requirements. So I think it was definitely a positive that the bank, the National Swiss Bank, stepped in to say that they will borrow the funds. But it also said that they do meet the capital and liquidity requirements imposed on banks. So it doesn't seem to be presenting a systemic risk at the moment. But like you said, yeah, this one has had issues for a number of years now for compliance failures, and it's kind of lost quite a bit of credibility in the markets.
What's the future of SVB, Silicon Valley Bank, if any, Fahima? That huge withdrawal of deposits that we've seen. Some analysts saying that the collapse is just the beginning. What we're seeing right now is only about to get worse.
Yeah, so I think with SVB is that it took investors deposits and loaned this to the venture capital industry, which is quite risky to begin with. And then it also had exposure to cryptocurrency. So when investors tried to withdraw deposits, they were unable to because the bank didn't have enough liquidity, and then that obviously led to a run on the bank. But it seems the risks there are quite isolated to SVB. It doesn't seem we've got other banks across the US that are facing similar issues. And, because SVB wasn't in the top 10, they weren't subject to stress tests that other big banks in the US would be subjected to. So for now, we don't think that it is a real risk to the other banks, other than there obviously being the negative contagion and sentiment risks there that have impacted the markets. But yeah, in the long term, we don't think it will have a broader effect.
Thank you very much for those insights, as always, Fahima Adia from Momentum Investments, giving us a wrap of the markets day that was, and of course reflecting on what we're seeing in Europe and the United States in the banking industries there. And that's all your business news for now. Sally, in the next bulletin, we're going to reflect on Tanzania and South Africa's relations, trade relations, and as you reflected on earlier, the energy opportunity that exists between the two countries.
Yeah, it's hopeful. We need energy from wherever we can get it at this stage.
Absolutely.
It's got to come all the way from Tanzania.
Let it be.
Let it be. Thank you.